Let's go back and take a look at that again. I mean, they're predicting a fairly small range in which this stock is going to be moving based on its current volatility. And that's assuming, of course, that the volatility remains the same. It could change, but right now, with the volatility extremely low, it looks like, actually, even though volatility is low, it looks like this stock moves around quite a bit. So this may not be a bad choice. But all things being equal, we want those with the profit index as high as possible with lowest historical volatility. So right now, Netflix looks like it's probably going to be the best choice because the profit index is relatively high. The range index is the highest of all of the issues that we've looked at. The cost index is at the lowest end of the range of all the ones that we looked at. And it's currently at a historical low probability. So that is a very, very good candidate. Our second candidate would probably be AVP, Avon Products. Historical low volatility, relatively high range index, relatively low cost, gives us a nice profit index. We would eliminate some of these other candidates. Usually I use this last column here just to kind of X out the ones that I'm not interested in. I would X out that immediately because of the high volatility. I'll X out that because of the high volatility. That is out, that is out, that is out, that is out, and that is out. Then I would go back again and take a look at this one, which has a relatively small profit range and profit index, so I would eliminate that issue. And just by the process of elimination, go through down through each one of these to determine which one we should probably be doing. Disney is in the middle of its range, so it could come down a little bit, but the range index is fairly low at 0.24. The cost index is a little bit high, so I would eliminate that. So now we've got three potential issues here: Netflix, Avon Products, and Clear Channel Communications. Now, as I noticed on this chart, Clear Channel Communications actually seems to move around quite a bit. But let's take a look at the last 60 days and 60 minutes of this chart. You can see over a 60-day period, this has not moved at all, hardly at all. That's why the profit index has dropped down to 0.51. Over a 60-day period, remember, we only have 20 days to expiration. And the reason that we're using the front month option again is because we want the highest gamma we can possibly get to affect our delta. The more the delta changes, the more opportunities we're going to have to scalp this stock. And if we take a look at this for the past 60 days, you can see that the stock has hardly moved at all. I believe that's because they received some sort of bid out offer, some sort of takeover offer, and that's why the stock has not moved. So we're going to immediately eliminate that option. Let's take a look at AVP again. And we need to look at it over the last 60 days on a 60-minute chart. This has moved relatively good. It's been up and down. It looks like it's moved within a channel, and we may have had a number of opportunities over the last 60 days to actually scalp this stock. So that is a fairly decent option here. That is a fairly good candidate. If we take a look at Netflix, you can also see that it's also had fairly good number of opportunities both up and down over the past 60 days on a 60-minute chart for opportunities for scalping this stock based on, the movement of the stock itself. So I would say our number one candidate is Netflix, and actually it also has the highest profit index. So the profit index really does work. Once you plug in your numbers, I would look at the profit index first, then I would go over to the historical volatility to make sure that it's relatively low compared to the stock over the past few years. And if we do look at the chart again, we can see that, let's go back to our 5-year chart on a daily basis. You can see that the volatility is at a relatively low spot. And that means that if volatility does increase, that we will have additional opportunities to profit from this particular issue. Now, if you're going to do more than one stock for gamma scalping, you might want to pick both Avon products as well as Netflix. And the reason for that is, like I mentioned, that we've been in a bear market now for several months, and it's extremely hard to find issues that have low historical volatility along with a good range in which it's moving around. So in order to increase profits, you may actually want to do both of these issues. There's nothing to say that you can't do both. You can't do more than one gamma scalping issue at a time. The thing that you have to keep in mind is whether or not you have sufficient capital. If you're purchasing 10 contracts on a straddle, that means you're buying 10 calls, 10 puts. The maximum amount of money that you could end up putting, or the maximum number of issues that you could be holding while gamma scalping these issues, is 1,000 shares of the stock that you're going to be doing. So if you take Netflix, for example, at $27.51, you could end up holding approximately $27,000 worth of the stock, not including margin. So on margin, it'll be about $13,000 or so. With Avon products, you're talking $36.37 a share times 1,000 shares. That's $36,000. If you were to do both of these, that's about $18,000 a margin. That's $13,000 a margin. You would need close to $31,000 if you had to at any one time hold 1,000 shares of each of these stocks. But both of those look like very good candidates, and we'll do further analysis just prior to entering into any type of gamma scalping position, which will be the subject of the very next video. So this is how we use the gamma scalping analysis tool. I've also included a sheet which we will talk about next time, which will help us determine exactly what our profit and loss is as we go into this trading session. You can see that this gamma scalping analysis tool, though, really does help you quantify and judge exactly which issues you should be gamma scalping and which you shouldn't be. So it's more than helpful if you do have this sheet. It's proprietary, remember, please. It's for Tradingology customers and members only. And please do not share it with anyone. All right, guys, that's it for today. Trade with confidence.